Hello friends, checking back in on the Canadian MJ sector. We're going to look at CGC, OGI, APH, MT, SPRWF because I can't get a chart of SL, and then ACB. So in the last video I highlighted how the strongest tickers were CGC, MT, and OGI, and how the weakest was ACB, and that pretty much has rung true for the last week or however long it's been. So we had a big bear day and a lot of selling in a lot of the Canadian sector, and we can see increase in bear volume on CGC. That stands out to me as a red flag, along with the loss of the middle Bollinger Band. So not only are we losing that key support, but we're seeing an increase in bear volume. We did keep $10 psychological support, and the bulls really want to keep closing over that level, because if we lose $10, there's not a ton of support down here. And the next level I picked out was the low of this. The high that we hit and the low of that day was 975, and we bounced today off of 978. I don't think that's a coincidence. You put your line there, you can see that is acting as support. If we lose $10 and lose 975, the next support I'm looking at is really down at 795. So that would be a big time pullback if we were to head to that level. And the fact that this bear volume is increasing and none of the volume can really be attributed to the bulls because we don't see a lower wick with bulls buying the dip. This is not a bullish reversal candlestick by any means. The bears are in control of CGC right now, and the way this is currently looking, I would expect some more downside. So after 975, we're looking down at 950 and 9 even, some psychological levels. But again, lack of support in this area. And on the weekly time frame, we can see that we are pulling back, breaking the low of last week, and consolidating. And the bulls want to form a higher low compared to 765, build a base of support. But as you know, I mean, we could pull down to $8 and on this weekly time frame still maintain a long-term uptrend. But again, that's a 20% drop from where we currently stand, and obviously the bulls don't want to see that. So we have to keep in mind that we've run from $3, $4 all the way up here. So we could pull back. Essentially, the huge red flag for me would be losing 555 support. We could pull back to $6 and still be in this uptrend, considering where we came from back at the start of 2016. So every time you see a huge move to the upside, multiple hundreds of percent, you can see a huge move to the downside and still maintain the long-term uptrend. So you need to be factoring this in when you're making your long-term game plan and have an exit plan for every trade. You can always reassess the situation and get back in and sit safely in cash while you are doing that reassessing. So you see CGC, we broke the low of November 25th, and that's going to be key on a lot of names going forward. We look at OGI, and it didn't break that low. So OGI is still a very clear tightening pattern where we have our high, our low of the pullback, lower high, higher low was found at 305, lower high, and now a higher low. And this is a bullish reversal candlestick. That's a bullish hammer, and a green day will show some strength tomorrow. Resistance is going to be 335 and 363. And we have our higher low support still intact, 305 and 310. So again, comparing to CGC, we broke the lows of all of that period of trading after that big bounce day. And we look at OGI, and it has not broken that level yet. So it's a clear tightening pattern, what I call reaching an equilibrium. And we should see a clear break of this pattern likely within the next 5 trading days or so. Weekly time frame shows that tightening range. You can see the candlesticks are getting tighter and tighter, and we're still maintaining higher lows the past 3 weeks. APH is also in a tightening pattern. We can see that low from back on November 30th. We have not broken that yet. So same deal. We have our high, consolidation low, lower high, higher low, lower high, higher low. It's not as clearly a bullish reversal hammer as OGI. We're looking at support of 490 and 469. Resistance is 515 and 550. So another one just like OGI where it's in a tightening range, but I would give the bulls in OGI a bit more credit for having that long lower wick showing the bulls buying the dip. So another clear tight pattern, should see a clear break in the next 5 days. Weekly time frame shows tightening here. Inside candlestick last week, inside candlestick this week currently. Declining volume is a common pattern when you see tightening range. So that is normal on the weekly time frame to be watching. OGI and APH, clear break coming in the near-term future. If I were looking to make a bullish entry in any of these names, all technical related, not caring about the fundamentals at all, it would be MT. And that's because we have a clear high, consolidation low, and higher high. Obviously, that was news-based, but the technicals are much more favorable to the bulls. And why I also like this chart is because we're consolidating, filling this gap. I'm looking at support, previous resistance, 618. The gap will fill at 605. Middle Bollinger Band support is going to be about 605 tomorrow. But the volume, look at that bull volume and compare it to the bear volume on the pullback. There's no red flags on this pullback in terms of huge bear volume or increasing bear volume. So I would be patiently waiting for a bullish reversal candlestick to form on the daily time frame, and I'd be getting into MT. I'm waiting for EMC, and just an update, the IPO on EMC is going to be trading on Friday at 9:30 a.m. at the bell. It will open. Pricing at 115, I do expect it to open higher, and there's about, I believe it's 65 million shares. That's off the top of my head. There is potential it's 55 million, but let's say it's 65 million, which means at $2 valuation, the market cap of the company would be $130 million. So certainly going to be trading EMC, and I think there's going to be a lot of action around it and a lot of hype. It is on a Friday, and you figure, well, that's going to take all the steam out of the bulls with the weekend right there, but it could also work the other way. If we have a successful IPO day, we've got 2 whole days, Saturday and Sunday, of articles to be published of this successful IPO, and that should reach a lot of eyes over the weekend and build up some hype into Monday morning. So we'll see how it all plays out. I'm certainly going to be covering that, and I'll put out some videos on that and start including it in these rundown videos. But if I were not getting into EMC, MT would be on strong buy watch over the next 2 days. And I would need to see signals and some reversal signs on the shorter term time frames, but this middle Bollinger Band looking for a bullish reversal candlestick to form off that level. Weekly time frame, very healthy for the bulls. Still full-on control by the bulls. No sign of slowing down at this point. SPRWF also maintaining strong, and we actually have higher lows and higher highs. So in that regard, SPRWF is looking really nice. We have the consolidation low of 126, higher high up to 144, higher low up to 131, a double bottom the last 2 days, and we have an inside candlestick today to be watching tomorrow. A break of 138 is bullish, a break of 131 is bearish, and would have us looking to the middle Bollinger Band of 122. So looking at these names real quick, looking like SPRWF and MT are the only ones still holding their middle Bollinger Band daily support. So that's certainly noteworthy. And the weekly time frame for SPRWF also still has multiple inside candlesticks. You can see it's getting tighter and tighter, 3 inside candlesticks in a row, and watching for a break of that signal on the weekly time frame as well. And again, declining volume pattern currently, although we should see an increase in volume this week with 3 trading days left to go. And we'll wrap it up with the bear. Stood out as the absolute lead bear in the last video I did, and it is not disappointing. We are in an all-out dump. This is shares hitting the market. This is dilution. Shares become free trading. Look at the increase in bear volume. Huge red flag. So we lost a lower high and lower low pattern. Look at the last time we saw a bull day in ACB. Even on the days where we closed green, they were all selling days. These black candlesticks indicate the open was at the high of the day, and we closed down near the low. So we've had one bull day in the past 3, 6, 9, 10 trading days. Everything else has been controlled by the bears. Increasing bear volume. This is the big one right here. Losing the low of this dump of 216 is a huge red flag. That would be like CGC losing 765 support. That's how significant ACB's pullback has been. So lower highs and lower lows clearly on the daily time frame. All that being said, it is a bullish reversal doji. So a green day tomorrow will confirm this reversal candlestick. But in terms of reversing this trend, the bulls pretty much need a miracle. And it could play out over a long term of building a base, higher lows, higher highs. But in terms of turning this trend around, I would have to see a break of 278, 285 to be confident in the bulls, which is pretty much requiring a 35% move from where we currently stand. So bullish reversal doji, green day, anticipated tomorrow with this candlestick shape. That tells us the odds are more likely than not we see a green day in ACB tomorrow. But again, it's not going to do anything to change this trend unless we see huge big time gains for the bulls. Still maintaining a long-term higher low pattern, but again, compared to everybody else, clear lead bear. So that's what we've got heading into tomorrow. Looking forward to the EMC IPO, scouting entry for MT, and OGI and APH, very clear tightening ranges to keep an eye on. I appreciate you watching and hope you have a fantastic forever.